Hello, and thank you all for attending week one of BFSG's 4-week summer webinar series, today covering Social Security. A few housekeeping items before I pass it over to our panelists today. For those of you that are viewing the presentation, as well as dialing on your phone potentially, there's a Q&A box in the Zoom menu, which is different from the chat box. Please type all questions into the Q&A box, and we will either type a response back or address all questions at the end of the 30-minute presentation during a live Q&A. For compliance purposes on a live and recorded webinar, we will not be unmuting lines. Please type your questions in. Should your questions be more personal in nature, we will provide contact information at the very end of the webinar and encourage you to reach out rather than asking personal questions on a live and recorded webinar. The same registration link will also be active following the webinar for a full on-demand replay in case you would like to listen again and or share with your friends and colleagues. Lastly, this series is a result of numerous surveys where we saw these topics were the most requested across the board. So at the very end, there will be a link to provide some feedback via survey, only 1 to 2 minutes post-webinar, as well as let us know any future topics you would like to see. With that, let me pass it over to our panelists for introductions. Paul?
Good morning, everyone. My name is Paul Horn. I'm a senior financial planner with Benefit Financial Services Group. I'm part of our wealth management team where I help clients grow, manage, and protect our assets. Along with myself, we have Keith Johnson, who will actually be the lead on the last 2 webcasts talking about legacy planning and the 7 pillars of financial planning. He is part of our institutional group where he helps plan participants with financial planning. And then our special guest for today is going to be Yolanda York. She has over 40 years experience working with the Social Security Administration. I think there's few people on earth that know more about this topic than she does. We're very lucky to have her. Yolanda, can you go ahead and give a little bit of description about yourself?
Hey, Paul, good morning to all. Yes, thank you so much for this invite. And I did retire from the Social Security Administration. It was an awesome 40 years. I got to learn so much, and I had all sorts of jobs with the administration. I retired as a public affairs director for San Diego, basically taking care of 3 million residents in San Diego County, and help them maximize their benefits, find out the hidden benefits. And I did this via, seminars, presentations, a lot of employer presentations that we used to do around the county. So yeah, that's my story with Social Security.
Thank you so much. And then finally, we have Chad Noorani, who's our moderator for the interactive polls, and he'll be leading the question and answer portion at the end of the call. So with that, Chad, can you kick us off with our first poll?
Yeah, thanks, Paul. So our first poll today, there will be 2 of them today to kind of keep the audience engaged. They are interactive polls. For any of you that are using the computer, a pop-up will show up on your screen to select an answer. So our first question is regarding the average Social Security benefit. Is how much do you think the average benefit was in 2019? The answers will be 1,000, 1,500, or 2,200. I'm going to launch polling right now. I'll share results at the end. I'll leave it up for about 15 seconds. Great. With that, let me close polling. We have most responses in. And I will also share results with the group. You can see about 53% of respondents said 1,500, 36 said 1,000, and 10% said 2,200. With that, let me stop sharing and pass it back to Paul.
Thank you so much, Chad. We have a very smart group here. You guys are correct. The average monthly benefit was actually $1,503. Yolanda, can you tell us a little bit more just kind of about the history of Social Security and how it all got started? Because I think it's really important to frame the discussion for today.
Yeah, so if we really go back to history, Chancellor Otto von Bismarck started Social Security in Germany in 1889. And in fact, by the time the US adopted Social Security in 1935, we were the 20th nation to have a program such as Social Security. So you might hear that other countries have a Social Security system, and it is possible that that the Social Security here in the US can also marry credits that you've earned in other countries to give you all the credits that you need to get Social Security. And one of the things that Roosevelt said back in 1935 when he started the program here was, you know, that Social Security would be like a three-legged stool. If you had your savings and investments, your pension, and your Social Security, then you would have a nice, comfortable retirement. You know, as time grows on, Paul, pensions have really become a thing of the past. And savings, it's all about what we invest and save now.
Yeah,
I
it's
know
unfortunate.
that
It's kind of gone from a three-legged stool to a two-legged stool.
yeah, and so you know, this is where we need to be very well educated as to how we're going to maximize our Social Security, because, you know, even though Social Security is only going to give you a 40% of your pre-retirement earnings, you have to make the right choices. So
Yeah.
this is why we're here today. We just want to empower you. We just want to make sure that you understand the questions to ask, the things that you need to know to get started.
Correct. Yeah. And just to reiterate, you know, I think it's so important for people to understand, because there are some common misconceptions with Social Security. I know one of the biggest ones I've seen over my career has been people telling me they don't need to save for retirement because they have Social Security and they'll cover their all their income needs in retirement. Unfortunately, $1,500 a month would not meet my needs here in California.
Well, that's
I'm sure
enough for
most
your
of us would feel the same
utilities,
way.
Paul.
Pretty much. All right, so we have a lot going on in this chart, so I'm going to kind of walk through this a little bit here. The area I want you guys to primarily focus on is the purple. This represents Social Security and the percentage of income replacement it will provide in retirement. The bottom here shows different pre-retirement income levels. So for example, someone that was making $30,000 per year pre-retirement, once they retire, Social Security will meet about 60% of their income needs in retirement to maintain the same standard of living. So realistically, they're going to need to find about 40% of their income from other sources like investments, pensions, things like that. And the exact opposite end, for someone that's making about $300,000 per year, Social Security is only going to meet about 12% of their income needs to maintain the same standard of living. So they're going to be much more reliant on their own investments to maintain their same lifestyle. The reality is for most individuals, Social Security represents about 40% of your income needs in retirement, meaning you're going to have to find 60% of your income from other sources to maintain the same lifestyle in retirement.
And you know, Paul, before we get away from this slide, it is important to note that the word social is really meaning that it's a social program and it compensates people at different levels of earnings. So this is why this is such a great, actually, you know, rate to show, because it does show, you know, your income versus what you're going to get from Social Security. Thank you so much for sharing that. So earnings record. You know, Social Security used to send a statement that looked like this. Prior to 2010, you would get this 3 months before your birthday. And then they stopped sending it because it was costing like $30 million a year to send this earnings statement. But now, if you can actually go to socialsecurity.gov, request it, and it'll, I mean, it takes you about 7-8 minutes to get this document. If you are 60 and older and you have not created a My Social Security account at socialsecurity.gov, you're actually getting this in the mail 3 months before your birthday. But let me tell you why you have to pay attention to this chart. Let me just share some of the things that I've learned in my 40 years is that Social Security takes the highest 35 years, drops the lowest 5, and then applies a formula. And it does index your earnings, right? So you have to review this at least every July, review your statement, because it's documenting all the years that you worked. One missing year where you actually worked and paid into Social Security could reduce your monthly benefit. Okay. Now, if we have some folks here on this call that are county employees or teachers and haven't been paying into Social Security, but they did in the past, So let's say you had 10 years, because technically all you need is 10 years of covered earnings to be entitled to a Social Security benefit. So someone who was a teacher had their 10 years, and then let's say back in 1990, they stopped working and pay into Social Security because now you're paying into a system that's not covered by Social Security. It will still, Social Security will still pay you a monthly benefit, but it will be reduced. And we'll talk about that in a little bit. The next slides that the slide here that we have, estimate your benefits, there's 3 categories there. There's the 1554 if you take it at full retirement age, and we'll find out shortly what full retirement age is. And then there's the benefit if you choose to wait till 70, it's growing 8% more per year. But if you think, you know what, I'm taking my money at 62, then it shows what the monthly benefit would be. And this would be an ongoing reduction, okay? So it's important to know. So what I would say, everyone on this call, something we all need to know is how much will our Social Security benefit be? Use the retirement estimator at socialsecurity.gov to give you a better quote. And if you are working with a financial advisor, they should be able to help you with this, okay? Okay, Paul, let's go on.
Thank you so much, Yolanda. All right, so this slide here represents everyone's full retirement age. And full retirement age is simply defined as the age that you can begin to take your Social Security benefits without any sort of penalty. Kind of interesting to note that this year, 1954, those born in 1954 is the last year that they can take it directly at 66. Starting next year, those born in 1955 and older, there's going to be a slight delay. All the way to age 1960 and later, their full retirement age will actually be 67. Now, I'm sure most of you know this, but Social Security, the earliest that you can begin collecting is at age 62. For someone that collects Social Security at age 62, and if their full retirement age is at 66, if you collect it early, you're going to receive about 75% of your benefits. So that means that you would take a 25% permanent reduction. So for example, if your benefits are $1,000 per month at your full retirement age, but you decide to take it at 66, you're going to receive $750 a month for your life, for the rest of your life, instead of $1,000 per month. Now, for those that decide to delay their benefits, the Social Security Administration actually gives you an 8% raise each year permanently for the rest of your life, going all the way to age 70, where you could get about 132% of your original benefit. So again, their original benefit was $1,000 per month at the full retirement age. At age 70, they would collect $1,320 for the rest of their life instead by delaying.
And the other thing that I want to add to this chart is that the number one question I used to get, well, what do you think, Yolanda? Should I take my benefits now at 62 or wait till full retirement age? Number one, just how lucky do you feel? Because if you think you're going to live long, then yeah, you should delay your benefits. But none of us really know unless longevity's on your side. My uncle's going to be 104 this September. So you know how things are looking out for me, right? But what I want to say about this chart is that full retirement age, if you're on the edge of whether taking it now or taking it later, here's what I would recommend. Take your benefits now. Let's say you're 62. You can just start collecting your benefits. And at the end of 12 months, if you feel, hey, I've been putting this Social Security check in the bank, it's not doing anything for me, you can always withdraw the claim. Withdraw your Social Security claim as long as you do it within the 12 months, and it'll be like nothing happened. Then you can start the benefit at whatever age. You can only do this once, so think about that. This would be something to consider.
Yeah, longevity is certainly one of the factors to look into here. One thing I do want to address as well, just keep in mind the full retirement age, guys, is separate from the age that you actually retire from your other jobs. So someone could retire at 58, but not start collecting their benefits until 62 or 66. And vice versa. Someone may work until age 72, but they may start collecting their benefits at age 66.
And Paul, I don't know if I shared this with you before, but right now in the USA, there's 40,000 people over 100 years of age collecting Social Security. When I used to do the tally and we used to count this, most of them were living in like San Marcos, California, if anyone knows where that is. But I don't know. I think they're drinking that Carlsbad water. It might have something to do with that.
Nice. Perfect. Chad, let's go ahead and pass it off to you for the next poll.
Great. Thank you, Paul. So this one is basically just, it's a fun poll asking the audience, just based on right now, having not listened to the entire presentation, which we will have a break-even slide in a couple slides. I'm talking through the differences between age 62 or age 70 and taking Social Security. What age are you currently planning to take Social Security? Let me launch polling right now. I'll leave it up for, again, about 15 seconds. And let me close polling, and I'll share the results with the group. We have the bulk of people, almost 30%, really split between 70 and 66. About 25% of the people saying not sure. That's why I'm listening today. So hopefully you find our presentation helpful today in helping you make that decision. With that, let me give it back to Paul.
Absolutely. So really interesting answers on today's poll, with most of the people either taking it at their full retirement age or delaying till age 70. That's exact opposite from what we see the general public typically doing. In fact, we see about half of all women and about 40% of all men begin to take their benefits at 62. And then we see about a third of all men and about a quarter of all women take their benefits at age 66 or their full retirement age. And only about 2 to 4% of men and women taking their benefits at age 70. So we're seeing is most people in general take their benefits much sooner than the people on the call here. So it's very interesting to see.
And this thing about delaying the benefits, let's go back one more slide because I want to share this. Delaying your benefits beyond full retirement age, it's initial FRA, Social Security calls it FRA. I just want to say, I was at a Pala Casino conference while I was still working, and I was helping a day porter, try to figure out his Social Security benefits, when to take it or delay them. But he tells me, oh, I'm going to wait till I'm 72 and a half to start collecting my Social Security because I want to get the maximum. It's age 70, okay? I have no idea where this gentleman would have gotten 70, but believe it or not, I have run into so many of those situations where people wait until after 70 and you've lost all this money. I had another engineer that I was talking to recently. He was now 74 years of age. He had gone into a Social Security office in Florida, and they had said to him, or he asked the questions, when can I start collecting benefits? He was making $110,000 a year at the time. And they said, oh, well, you would have to wait till you stop working, right? He's 65, he's not full retirement age. And they said, you have to wait till you stop working. They could have given him a different answer, but that's, I think, what he heard. He's now 74. And of course, he's lost 4 years worth of benefits. I was able to help him file his claim, and we got him 6 months retro. So technically, he lost 3.5 years of earnings. So I just wanted to say that to everyone. You really need to take your benefits at 70 if you are going to wait. Thanks, Paul.
Yeah, there's no value in waiting beyond that. I completely agree. And that's great that you're able to retro that. All right, so Chad had alluded to this slide before. This is looking a little bit more, it was called the break-even analysis. And this helps answer the question with longevity and why it's so important. Again, we talked about if you take your benefits early, you're going to receive approximately 75% of what is that FRA amount, also known as primary insurance amount. Over the course of your lifespan, if you compare that to taking your benefits at age 66 or getting 100% of your benefits, what we find is around age 78, before then, you get more money because you've received 4 extra years of payments by taking it early. But after age 78, there's what's called the break-even point. And what we find is anyone that lives beyond that age would make more money delaying until 66. And for someone that delays all the way till age 70, what we find here is that break-even point is actually about 82.5. So long story short, if your life expectancy is 78 or less, taking it earliest makes the most sense from an academic perspective. And then if your life expectancy is somewhere around age 80, so 78 to 82, you want to take it around your full retirement age. And if your life expectancy is longer than about 82.5, textbooks would tell you then to take it at age 70, because that's going to give you the most money over your lifetime. Now, what's also interesting is if you're looking at this, just keep in mind that longevity is one of the important factors to consider, but I know my crystal ball is broken. I don't know if your guys' is still working. So really, we're only going to be able to answer this question in hindsight. So this is a very important factor to consider, but it's certainly not the only factor to consider.
Well, Paul, you know, in my situation, I know that when I'm 82.5, I'm not going to be hiking like I'm doing now, and I'm not going to be traveling like I travel now. I'm probably going to be sitting, watching grandkids. So, you know, it's kind of, you're right. It's what we want to do with our money in our future. And I always wanted to throw that at people because, you know, we are really all about safeguarding our funds and having enough for the future. But again, this is why I always advise, speaking with your financial planner and letting them know, what your concerns are about your future.
Yeah, and it really comes down to trying to balance today's wants with tomorrow's needs. Mm-hmm. From a financial planning perspective, that's one of the things that we'll take a very close look at here. Okay. Yeah, and so Social Security benefits can actually be subject to taxes, and not a lot of people are aware of this. In fact, there's a formula used by the Social Security Administration called your combined income. To get there, it's your adjusted gross income plus your non-taxable interest, think income from municipal bonds, and half of your Social Security benefits. This gives you what's called your combined income. Now, if you're an individual and your combined income is anywhere between $25,000 to $34,000 per year, up to 50% of your Social Security benefits are subject to taxes. And if your income is over $34,000, actually up to 85% of your benefits can be subject to taxes. So again, if you're making $1,000 per month from your benefits, if you're in this bracket, that 25 to 34, $500 would be subject to taxes, and $850 would be subject to taxes if you're over 34,000. And if you're married jointly, the numbers aren't much higher. Again, 50% taxable, 32 to 44,000. And most Californians are going to be, if you're married, above 44,000 per year in joint income, and that's going to be subject to 85% taxes. Or sorry, 85% of your taxes will be subject. 85% of your Social Security benefits will be subject to taxes. I can get that wording right.
That's all right. Hey, and there is a form if you want to have your Social Security, your taxes, your federal taxes withheld from your Social Security. It's an IRS form W4V for voluntary, and you can have 7, 10, 12, or 22% of your Social Security check withheld, so you don't have to pay the taxes at the end. And that's a form that actually does require a wet signature. Okay. But you know, the one other, I'm going to just share another story about a gentleman that I had in the office. And so he's 70 and he refuses to take his Social Security benefits because he is not going to be taxed. I mean, that was his whole scene. I'm not going to be taxed. And I just want to say, I am not a financial advisor. You know, I just understand Social Security, but I had to say to him, okay, so let me tell you your worst case scenario. If you take your Social Security now at 70, worst case scenario is that you will lose 3 Social Security checks to IRS, but the rest, they're yours. Are you sure you don't want your Social Security benefit? And then guess what happened? He said, oh, okay, I'll take them. So, I mean, you know, you have to look at things, you know, what's the worst case scenario that you can lose out of 12 checks that you get from Social Security?
Sure.
Yeah.
All right, so let's talk about some different strategies to help you maximize your benefits. If you're a married couple, you actually have flexibility because spouses aren't required to take their benefits at the same time. So for example, one couple that I'm working with right now helping retire this year, the wife is actually the primary breadwinner. They're both retiring at age 66, their full retirement age. Their pensions alone aren't going to be enough to meet all their income needs. So instead of relying on investments, what we're doing is we're having the husband take his Social Security benefits at age 66 because it's the smaller benefit and it's going to meet most of their needs. What we're doing for the wife is we're going to have the wife delay her benefit until age 70. Now, the reason we're having the wife delay her benefit is because it's the larger benefit. So number one, it's going to get the 8% increase per year up until age 70. And secondly, if something happens to her prematurely, what happens is the husband who has the lower benefit, he'll lose his benefit, but he will gain his wife's benefit. So worst case scenario, if something happens to the primary breadwinner early using this sort of strategy, that's going to maximize the income for the other spouse over the rest of their life.
That's right. And another thing to keep in mind too is if you have children under the age of 18 or a disabled child that became disabled prior to 22, that's another reason why you might want to take the benefits early, because now you have a family max that's being paid to the household. So you should pay attention to that.
Absolutely.
So survivor's benefit. So here's a question I used to work a lot with injured service members, and one of the questions I would ask, when do you think you will start collecting Social Security? And mind you, everybody here is between 18 years of age and 35. These are injured service members at Balboa Naval Hospital. And they would say, oh, never, Social Security is going away. And I'm like, well, what do you think it's going away? Oh, we hear it's, you know, going bankrupt. Well, the reality of that is that Social Security does have a solvency problem, but just to share it with all of you now, it's the year 20.
Yeah, we'll get more into that in a little bit.
Okay, so it's the year 2035, but the survivor benefits, there's 1 in 3 chances of you dying before reaching age 62 or becoming disabled. So survivor's benefit, obviously, you know, that's something to keep in mind. And there's an important number to remember. It's 9 months, 12 months, and 10 years. And I want to share this with you now because if you marry someone, you have to be married to that individual for at least 9 months in order for you to get survivor's benefits. I had a couple, a same-sex couple recently who had been together for 20 years. One of the gentlemen became very, very ill. And so they decided to get married in June, but then he dies in July. So they did not have this 9-month marriage duration. So the surviving spouse is not entitled to any benefits, okay? So that's something we should always think about. 12 months, for a 12-month marriage duration, if you marry someone, let's say I'm 62, I have never worked a day in my life, and I marry someone that is collecting Social Security, I would have to be married to them for at least 12 months to be entitled to benefits. Now, if we go to former spousal benefits, I have to have a 10-year marriage duration. So in other words, if I was to divorce the spouse that I had just married at 62 and divorce him 3 years later, I would lose the benefits because I needed to have had a 10-year marriage duration.
And that 10-year number also comes important for the former spousal benefits as well, correct?
Right. Well, yeah, exactly. I wanted to be a formal spouse, but if I don't have my 10 years. So my cousin calls me and she says, Yolanda, what did you say the 10-year or the marriage duration was? And I said 10 years. She had been married 9 years and 9 months when her final divorce decree, finalized. So she was never entitled to those benefits.
But if you are someone that has a prior marriage for 10 years or longer, you may be eligible for your ex-spouse's benefits as well. So that's important consideration when you're doing your planning for Social Security.
Oh my gosh, yes. In fact, my brother's neighbor, he's 72 years of age. He was getting $800 a month. He was married to a woman who had a 10-year marriage duration. She was the CEO in Orange County. She ended up passing away. Her monthly benefit was $2,460. When I helped him file this claim, he ended up inheriting that $2,460 because they had this 10-year marriage duration. Okay, so this, all right. Who can be offset from Social Security? Individuals who earn a pension and did not pay into Social Security taxes are eligible for a Social Security benefit based on their earnings of work. And there is a modified formula for this. So if you have your 10 years of earnings into Social Security, which means 40 credits, you are entitled to a Social Security benefit. But if you're now paying into a different system, Social Security will ask you the question, are you entitled to a different pension other than Social Security? If you say yes, then your Social Security benefit may be reduced up to $480, but it can never be more than 50% of your pension.
Yeah, so if you're a public service or civil service worker and you're paying into something other than Social Security, there is a chance that Social Security benefits could be reduced, which is what this is referring to here. And then, Joanna, can you talk just a little bit about substantial earnings real quick?
Yes, so if you end up earning 30 years of substantial earnings, and for example, in the year 2020, it's on our chart here, if you were to make $25,575 and you end up having 30 years, then the offset disappears. There would be no Social Security offset once you earn your 30 years of substantial earnings.
Excellent. Now, as we talked about before, Social Security is having some strains on it. What we're seeing here is when Social Security was originally created, people's average life expectancy was about 6 to 8 years. And now people that are collecting Social Security are living 15, 20 years or more. You know, in the case of Yolanda's uncle, I believe it was, reaching 104. So that's several decades of collecting Social Security. It's creating just strain on the funding level for Social Security. So there's been several different ideas that have been floated. Some of them have been to recalculate cost of living adjustments, increase different types of taxes, whether it's the payroll tax. They've talked about raising the full retirement age, which they've already did recently. For everyone now, it was 66, like we talked about. Now it's 66 in several years up until eventually reaching age 67. That could eventually become age 68, 70, 72. Different numbers have been floated around. Perhaps one of the ones that gets the most coverage is what's called means testing. And so what that would be is Social Security would look at what your income is while you're working. And if it's above a certain threshold, your benefits would be reduced or eliminated entirely. Reality is we haven't seen much change to Social Security. And I think there's a good reason for that. If there's two things I've learned about politicians, it's number one, they do pretty much whatever it takes to get elected. And number two, they're going to do whatever it takes to stay re-elected. So making some choices here on Social Security is going to be very painful. It's really going to be the least painful option is probably what's going to be chosen. And the last thing they want to do is upset their voter base so they don't get re-elected. So a lot of politicians have been kicking the can down the road, so to speak. So let's talk a little bit about next steps here. In just a moment here, we're going to open it up to Chad and we're going to go through the question and answer portion here. I do want to point out that we do have our next round next week is going to be on Medicare. It's going to be at the same time, next Tuesday at 10 a.m. If you have not registered already, please feel free to do so. Use the same flyer that you used to register for this event, or you can go to this website. Just keep in mind it's going to be a different link than what you used for this webinar today. If you have questions pertaining to yourself, so individual situations, you can reach out to either myself or Yolanda York, and we would be happy to answer those questions personally for you. Our phone number and email address is here. We're happy to help answer any specific questions, help develop a Social Security strategy. And if you reach out to us, we can also send you a free white paper we have talking about Social Security and Medicare and the financial challenges that they're facing currently. And I would like to point out that Chad is in the chat box sending out the Social Security link. So please, if you would like to take a look at the link there for either the survey for today's call or for registering for next week's Medicare, please feel free to click on those links directly in the chat, and you can do that there. Just want you guys to take a quick here and meet the team. If you saw my email that I had there in the last thing, it's not actually my personal email, it's financialplanning@bfsg.com, and because we have a team of financial planners here that work with our clients. So if you reach out to the email, you may not hear from me specifically, but you will hear from one of us. Everybody comes with at least 10 years of background and wonderful expertise in several different areas. Thank you so much, you guys, for attending this. And Chad, I'm going to pass it off to you.
Great. Thank you, Paul. So again, thank you for the great presentation, Yolanda and Paul. Again, before we start the Q&A, we have a long list of some really good questions I think will definitely be informative for a lot of people on the call today. Before we start that, Paul mentioned, I did put in the chat box a link to the Medicare presentation next week, as well as our post-event survey for today's presentation, as well as a link for anybody that has not registered with ssa.gov. I posted that link where you can sign in to either view your benefit or register for the first time and start checking those forms rather than receiving the hard copy for them. With that, as we begin the Q&A portion, please do not hesitate to continue typing in questions throughout the session. We will answer as many as possible before hitting the top of the hour. Should your question not be answered before time runs out, please do not hesitate to reach out to us directly. So I think the first question is, how do I apply and when should I apply for Social Security?
Oh, Chad, that's an easy question. You should apply 3 months before you want to start collecting Social Security. You can apply at socialsecurity.gov. It'll take you about 17 minutes to file your claim online. If you choose to speak to someone at Social Security, you can always dial their office and they would be happy to book a phone appointment for you.
Thanks, Yolanda. So next question is, why would I not want to start taking Social Security benefits as soon as it's available? Even if while still working?
Oh, super good question.
Yeah.
Because you're only allowed to earn X amount of dollars. So for 2020, you can earn up to $18,000 if you're under 66 years of age. Do we have those numbers here? You can earn up to $18,240 a year, a gross income, and still get your Social Security at full retirement age. So when you're 66 plus, you can earn unlimited earnings. So that would be one of the reasons you wouldn't be able to collect. If you earn over the $18,240 a year, if you're under 66, after this amount, they hold $1 for every 2. And
So, go ahead.
And I'm sorry, Chad, what was the other part of that question?
Yeah, something I'd like to throw in real quick too. So a couple of reasons why you may not want to take it at age 62. Number one is just going to be looking at your overall financial plan. A lot of people are reliant on Social Security to meet their income needs throughout retirement. And so you may want to delay Social Security to meet future income needs. As I talked about earlier, it's trying to balancing today's wants with tomorrow's needs. And oftentimes, if you have a long life expectancy or other expenses, or maybe not a lot of other income sources, you may need to continue working and delay collecting to maximize your benefits to meet future income needs. There's also the tax equation there, which we talked about. Yolanda mentioned that your benefits could potentially be reduced depending on what your AGI is if you collect early as well. So this would be the primary reasons, I believe.
Great. So the next question we have, in thinking about the Social Security, website and the form that you look at that estimates your benefit, is that estimated the actual expected payment or just an estimate, meaning that your payment could actually be lower than what the website's estimating today?
If you use the retirement estimator, there's two programs. There's the My Social Security, and then there's the retirement estimator. If you use the retirement estimator, it's going to give you an exact amount of your monthly benefits today.
And so the next question is, so we have these accounts that forecast a monthly benefit. Is that forecast based on working full time until normal retirement age? Or is there a point where you've paid in enough that you've kind of maxed out, quote unquote? If so, what is the max per month benefit and or total dollar amount paid in overtime?
Well, the maximum earnings you can pay out that Social Security pays today in the year 2020 is $3,011. So if you've earned, maximum wages for your entire history, that's the most you could possibly get would be the $3,011. When you use the retirement estimator, it also tells you, it's picking up your wages from this best 35 years. It's actually reading this information. And you have to tell the system, I want a calculation till June of 2021. Then it will give you an accurate figure for June of 2021. So it's depending on the month and year that you select that you get an accurate amount. Oh, and let me add this. So let's say, for example, I'm going to make $90,000 between now and the year 2021. I would write into the system that that's what I expect to earn. And then the system will calculate my benefits, my Social Security benefits, by that $90,000. If it's not $90,000 and it's less, then my benefit would be slightly less. And when I say slightly less, it could be anywhere between $2 to $7 less. Not a big deal.
Thanks, Yolanda. So the next question is, say that I retired at age 67, but did not actually start taking Social Security until age 70. Would I still get the full benefit of waiting till age 70?
Yes.
Yes. Go ahead, Paul.
Yeah. So, as I mentioned before, your retirement age is different than the age that you collect Social Security. So if you decide to retire before 70, but not collect until 70, yes, you would get that full raise. Again, if you're eligible to collect at age 66, you'd get that full 132% bonus or a permanent raise of about 32%.
Thanks all. So the next question, which we have a few of the exact same question, that says, if you start taking benefits before full retirement age and decide to revoke that, as you mentioned, you can do so within the first 12 months, do you have to pay back the money already received?
Well, you can if you want to get 100%. So let's say I took it at 62 and I took it for 12 months. I realized that was a mistake. I paid back all the 12 months without any interest. Now, when I choose to collect my benefit at 66, I get 100% of my Social Security benefit. But if on the other hand, I took it at 62 and let's say I don't really want to return this money that I got from Social Security, but I want to suspend my benefits, I can do that. When I become 66, which is the year I think I want to collect my benefit, my Social Security benefit would be reduced by those 12 months that I got when I was, 62. The reduction is 0.5%.
Great. So the next question we have is, if I was a county employee for part of my work life, so I already know that my Social Security benefit will be reduced, but if I wait to age 70 to start claiming Social Security, will my benefit increase accordingly or will it remain the same?
I think there's two interesting parts to that. One is the benefit will increase because you'll still get the 8% raise per year automatically, so that's going to raise the benefit. But if you continue working until age 70 and you're not in the county and you're in the Social Security system, working towards the 40 quarters, Again, it takes the best 35 years here, like we're showing here. If you're still earning and you're earning a high wage, that also can help increase the potential benefit that you would receive.
Thanks, Paul. So the next question, which we may have addressed in the last slide of the presentation, but are there still concerns about the viability of the Social Security program due to less people paying in, even if that's just perception and/or people living longer?
Okay, so if we're talking about the solvency of Social Security?
That's correct.
Okay, so April 22nd of this year, the actuaries came together. They did the 75-year projection plan, and the determination is that in the year 2035, Social Security will definitely have a problem, and that means that instead of paying you 100% of your benefit, it will be reduced to 79%. So if you were getting $1,000, Social Security can afford to pay you $790. This is the reason for that is because by the year of 2035, there is 2 people working and paying into Social Security and 1 person collecting. 1965, there was 5 people working and paying into Social Security and 1 person collecting. It's really us baby boomers. I happen to be one of these baby boomers. There's just so many of us, and we're definitely living longer, and that's really the problem with the solvency of Social Security.
Thanks,
Yeah,
Yolanda.
so reality is, yep.
Sorry, go Paul. No, go Paul.
No, go ahead. Okay, yeah, so reality is Social Security, I don't think that they would permanently get rid of it, but there could be some changes in the future. The changes are probably going to impact the younger listeners less so than the older workers, just based on necessity.
Exactly. You know what? If Roosevelt was here today, he would not even recognize Social Security because his concept of retirement and survivor's benefits has evolved, and it will continue to evolve, and it will be here for you. So that's what I want to say. It's definitely, Social Security is not going anywhere.
Great. So next question we have is, what is the effect of having a younger spouse on when you should take retirement or take your benefit?
Well, having a younger spouse, sorry, go ahead.
Yeah, well, younger means what? Because that's a question that we would need to know if you're talking about a 42-year-old spouse versus a 62-year-old spouse. But if you're, both of retirement age, and I think Paul might have been saying, if the 62-year-old spouse has a lower wages, but has worked and paid into Social Security, maybe that spouse should collect the benefits first, and the higher wage earner wait till, full retirement age or age 70. Did I understand that question, Paul?
Yeah, I think so. It's an interesting question, and the question would be best answered offline when we understand more details, as Yolanda kind of alluded to. But just from a general planning perspective, when you have a younger spouse, and I would define younger in this example, 10 years or more, you're probably going to be more prone to delaying benefits to give them higher income, like we talked about for the survivor benefit, if there's a discrepancy in earnings. If there's not a discrepancy in earnings, meaning they're both earning about the same or have the same earnings potential at least, then you may want to take it a little bit sooner.
Thank you both. Next question is Social Security taxable as ordinary income?
Yes, it's taxable. So the 50% threshold and the 85% of Social Security benefits would be taxed at ordinary income tax rates.
And the next question is, can you receive Social Security even if you move to another country after you retire?
Well, just don't go to Cuba because Social Security is not sending any money to Cuba. But yes, there is treaties with about 29 different countries, and your Social Security benefit may go. If you are a U.S. citizen, you'll get your 100% benefit of your Social Security. If you're not a U.S. citizen, then Social Security will withhold a percentage until you file your taxes. Great question.
So next question is, Can my 401k withdrawals affect the percentage of benefits being taxed?
Yeah, so anything that would be treated as ordinary income, there's several things that would impact this. That could include Roth conversions, any distributions from IRAs, 401ks that are tax deferred, and any large sale of investments. So if you have a large capital gain, for example, that could potentially impact it as well.
And so our next question is, I've stopped contributing to the Social Security tax, but I'm still working. What are the pros and cons between taking Social Security benefit early and waiting until full retirement in this case?
Okay, well, if you haven't paid your Social Security tax because, let's say, you're self-employed, using the retirement estimator, that's going to be your best friend to play scenarios. And all I can say is that for that, you would need a little bit of guidance to figure out if your monthly benefit would be reduced. So definitely use the Social Security retirement estimator for that.
Next question is, if your spouse were to pass away and you hope to qualify for their benefit, do you have to have been married for a certain amount of time?
Yes, 9 months if the marriage ends in death.
And so next, go ahead.
I was just going to reaffirm, yeah. So if your marriage lasted for more than 9 months, you're fine for the widow's benefits.
And so our next question is, for married couples, do both get their benefit, or do only one of them if they draw at the same time?
Oh, both of you get your own benefit. Absolutely. You both have worked and paid into a Social Security. You're both entitled to your own.
Correct. Yeah, and if one of the spouses, let's say one of the spouses is a homemaker and hasn't worked, they're entitled to the greater of their own benefit or 50% of their spouse's benefit.
So our next question, which we did answer in the text, but I think it's good for the entire audience. If a woman collecting Social Security from her late husband remarries, is her benefit reduced, or does she lose it?
So if you remarry after age 60, you do not forfeit your benefit. That's actually a law that changed back in 1979. So here, I had a scenario. This lady was 57 years of age. She went ahead and got married and then realized that she had made a mistake. And all I could say is, you know what? Nothing is in stone. If you undo that marriage, wait till you're 60 and then remarry that same individual, you are safe.
And so our next question, which again, we answered via the text, but I do think it is good for the entire audience, is kind of two parts. Number one, if an ex-spouse applies for your benefit, are you made aware of that? And then also, does that mean your benefit is now less?
No, your benefit would not be less. It does not take away from your benefit ever. You could have 3 spouses, 3 ex-spouses on your Social Security benefit. They would all get a benefit. Yours would never be reduced. And again, let me just tell you, this is not what's causing Social Security problems, okay? It's, again, life expectancy.
And so next, we mentioned a federal tax withholding form. What was that form again?
W-4V, yes.
Form W-4V.
And you can get that on the Social Security website or the IRS federal website.
So next question is, what federal taxes are applied to Social Security? For example, Medicare tax, Social Security, et cetera.
So what's reduced from the Social Security tax, that would be your Medicare premium. And of course, if you want to have your taxes withdrawn from your Social Security. Am I understanding that question correctly?
That was correct.
Okay.
And so next one is regarding the windfall exemption. With the windfall exemption, if your spouse has a much higher Social Security payment, can you take the 50% spousal benefit instead of your own, assuming you have at least 10 years of Social Security years? How does the windfall impact this payment amount?
Well, that would be the government pension offset. It's not the windfall elimination. So let's say you are entitled to a pension, and let's say your pension happens to be $3,000 a month. and your spouse is receiving $2,000 Social Security, as a spouse, you would be entitled to 50% at full retirement age, but there's a 2/3 offset. Okay, so now Social Security is basically determining, is your $3,000 pension higher than the $1,000 Social Security spousal benefit? You will get the higher of the two. Okay, so basically you're not going to let go of your pension. But if you're still let's say you're still working, and let's say you're 66 years of age and you're going to continue to work till 70 and not collect that pension, yes, you can collect that Social Security spousal benefit. In the meantime, the moment you apply for your pension, then that Social Security benefit goes away. Thank you.
Yolanda, the next question is, so if you are currently drawing a foreign Social Security benefit, is your U.S. benefit reduced?
Your Social Security pension? Yes.
Correct.
It can be. There's an offset that it's the same way that the windfall elimination is addressed.
And so next question is, if I have 20 years of substantial years in Social Security, but now work for the government, is there any value to getting a second job that pays into Social Security if the earnings would be enough to add more substantial years?
You know, that could be, I mean, that's 10 more years that you need. And if you looked at this chart that we had on the website, I mean, for example, this year you need to make at least $25,000. If you could find a job that's paying you substantial earnings, I would say yes, do it. Another way you can find out what your monthly benefit would be, well, obviously, you know, without the offset, is using the retirement estimator at socialsecurity.gov.
Thank you. So the next question, if the government elects to pursue means testing for Social Security, will it apply to those who have already started taking it before the legislation was passed?
It probably, I would expect it to be grandfathered.
And you know what? I also want to say there's about 14 different, you know, speculations of what they're going to do. One of them being the means test. And I just cannot believe that this one actually will ever be at the plate, because I mean, I think there would be a revolution. You know, you pay your taxes and all of a sudden they're going to say, well, we can't give it to you because your earnings are so high. It's like buying car insurance and then wrecking the car and the insurance won't pay because your income is high. It's the same thing. Social Security insurance is an insurance. So anyway, those are my thoughts about that.
And so next question, if my spouse and I both collect our Social Security benefit at age 62 and my spouse passes away, am I able to collect their Social Security if we've been married for over 50 years because theirs is larger?
Yes, and it would be 82.5. You can never get 100% unless you both took it at 66. So at 62, you would be at 82.5. And it's a month-by-month reduction as well.
And so next question is, would a prenup cancel out the ex-spouse Social Security entitlement?
Oh my gosh.
You know, and what would need to be specified in the prenup?
Oh my gosh. Social Security is going to ignore anything and everything that's in a divorce decree. And I used to get a lot of these cases where, you know, somebody gave up the summer house so they wouldn't collect their Social Security benefit. Social Security could care less about that. They do not, they do not follow divorce decrees. So you will still be entitled to a Social Security spousal benefit as a former spouse.
All right, so next question. If we file for Social Security at full retirement age and continue to work at our career job, does it just affect taxes or anything else?
It could correct me if I'm wrong here, Yolanda, but it could potentially impact their benefits, because one, they're losing out on the 8% per year growth. But secondly, if they're still working and they're high income earners, again, that calculation is based on your highest 35 years. So it could potentially reduce a little bit because of that as well.
Okay, so with this question, I almost have to go back and forth. I would need to know more about your situation, and I would just say that if you're at 66 getting a substantial amount from Social Security, and longevity is not on your side, I would take it at 66. That's quite a bit of money to let go, and it is going to offset. I mean, you are going to have social or taxes. But again, if you're losing one check out of your 12 checks to pay a tax, would it not be worth it to you?
And so before I continue, so we do have a number of really good questions left. I do want to be sensitive to everybody's time. We are at the top of the hour. Paul and Yolanda, are you open to continuing with the Q&A?
Yes.
Absolutely.
Great. So next question is, and I think, Paul, the break-even slide might be good to go to for this, is the point in time at which taking benefits at age 66 versus taking benefit at age 70 are equal in the amount of benefits. And so
yeah, the break-even point would be, if I'm understanding this question right, the answer would be 82 there. For between 66 and age 70, the break-even point would be 82.5 approximately. Am I understanding that question correct? The question correctly?
That's correct.
Okay. Okay.
And then so next question is there a way for me to find out how much my Social Security benefit would be if I applied under my spouse's benefits?
No. You need to, well, let me back that up. There is a way. If your spouse is on the call with Social Security, and they can give you that, they will give you that information. But without that spouse not being there, the only other way would be looking at the benefit statement. And if you see that their entitlement is $1,000, as a spouse at 62 gets 37%, at 66 you get 50%. So yes, you do need to have your spouse there available.
Yep, thank you. So next question is, did we say that $3,011 is the absolute maximum Social Security anyone can earn?
Not like this. This is not what I said. So $3,011 is the maximum Social Security will pay in the year 2020, and that's for a person who became per month. That's a person that became per month, 3011. So that means you were 66 in the year 2011, and for the last 30 years, you have made maximum wages every year to earn you that $3,011 per month.
And so the next question, which, Paul, it might be good to go back to slide 11 for the substantial earnings, says, the windfall elimination relates to civil service or federal government employees who have worked full-time for 30 or more years. Is that correct? And then the chart showed, I think the bottom right of this chart, 90% for 30 or more years. Can you explain this a little bit more?
So this 30 or more, it's actually down to, on Social Security website, there's a reduction table that goes month by month of what your monthly benefits would be reduced. So that 90%, so let's say the person that's getting $1,500 a month, if they had 30 or more years of Social Security, their Social Security benefit would probably be reduced either by $1 or by $0. That's really what it amounts to, that 90% reduction when you have 30 or more years. And I would be happy to show you where that website is so you can see. It's called the WEP chart, WEP, Windfall Elimination Provision Chart at socialsecurity.gov. It'll show you exactly what that reduction would be.
Thanks, Yolanda. Next question is, if your pension is an employer contribution pension, and I'm also paying into Social Security, would my benefit be reduced because of that pension, noting I am not a government employee?
No reduction. If you're paying into Social Security, you have no reduction at all.
And so really quickly, if you collect at 68 years instead of the eligible 66, how much higher would your monthly benefit be? Or is it only a difference between 66 and 70?
No, it goes up 8% per year. So here, if you're assuming your full retirement age is 66 and you were to collect your benefits at 68, you would receive 116% of your full retirement age benefits.
Mm-hmm. And you know what, Paul? So let's say this person retired within like 67 and 11 months. Well, it would be reduced by a small percentage. It wouldn't be 116, it'd be more like 115. So people need to keep that in mind. It's not like you have to wait till the next exact number to get that benefit.
Next question is, if Social Security is reduced by the year 2035 and you've already started collecting your monthly amount, will your payment be lessened?
Nobody will be grandfathered in, because remember, by that year, there's only 2 people working and paying into Social Security and 1 person collecting. There is no grandfather for anyone, including my mom. That's just the way that will be.
And so if I'm getting money from my retirement account and my spouse is getting Social Security, do I qualify for the survival benefit from Social Security?
So you would get the burial expense of $255, a one-time lump sum benefit, if you are getting a retirement pension. Then that becomes the windfall. The government pension offset. So there's a 2/3 offset reduction.
And so next question is, how does the surviving child's benefit work with Social Security?
75% of the benefits are paid from the, let's see, it's called master beneficiary insurance amount. So for example, the wage earner is getting $1,000, then the family max, if you have 1 child, would be up to 75% of that benefit for a survivor child. And if there's 10 children, then all the children have to share that maximum benefit.
So our next question is, in looking at the windfall provision, how does this affect the survivor benefits?
Well, if you die, that offset dies with you, and then that means that your spouse is entitled to get the normal amount, whatever it was minus the reduction of the offset.
Our next question is, do you have to do anything to identify yourself with Social Security as a U.S. citizen? I.e., do you have to report to them that you are a citizen by sending them some type of documentation?
Oh, fantastic question. I'm so glad you asked this, because yes, you have to, when you become a U.S. citizen, you need to come into Social Security with your certificate of citizenship and update your records, so they will have that information on file. And I would highly recommend everybody does it quickly. Well, at least wait till the offices go, open again, but definitely try and do that before you start collecting the benefits.
And so next question, are Social Security benefits always taxable? We mentioned something about unlimited income.
They're not always taxable, and I know Paul has a chart to tell you.
Yeah, if you're under the threshold here, if your combined income is under the threshold, if you're an individual, if it's less than $25,000 per year, it's not taxable. And if you're married, if it's under $32,000 per year, it's not taxable. Otherwise, your benefit is going to be subject to some form of taxes.
So our next question is, what happens if your spouse passes away before they begin collecting Social Security?
Well, if there's a surviving child under the age of 18, or a disabled child under the age of 22, or a parent that would be entitled to benefits off of their record, or a spouse that meets the eligibility, they would be entitled. But let's say your spouse passes away and you're still not of age to collect the benefit, then you wouldn't get that benefit of your spouse until you meet the age qualification, which is the earliest you can get widow's benefits would be age 60 or 50 if you are disabled.
So our next question is there any age restrictions to collecting a spouse's benefit?
Yes. As a spouse, you have to be at least age 62 to collect spousal benefits, or any age as long as you have a child under the age of 16.
Great. And our next question is, if I pass away, would my spouse, a legal U.S. resident only, be able to collect my benefits? Additionally, if so, would she be able to collect upon my death, or would she need to wait until she is of retirement age?
They would have to be, yes, they could collect off of your record, but they would have to be at least age 60 if they're not making more than that $18,200 a year. That's when a widow can collect. Otherwise, they would have to be, at full retirement age to collect your benefits. And again, the burial expense up to $55 would be paid to your spouse.
And so if your spouse worked for only 4 years and died at age 52, can the other spouse collect Social Security from the deceased spouse?
So in this situation, you definitely need to have at least 10 years of earnings to be eligible for a Social Security benefit. So 4 years, technically the answer would have been 10 years to be eligible. But for someone that's young, let's say a 24-year-old that passes away and leaves a widow behind with 2 kids, they only need a year and a half of earnings to have been eligible for a survivor's benefit. So it depends on your age, but 50 and older, you definitely need the 10 years.
So our next question is, can a large capital gain from the sale of real property after age 65 be invested in Roth to avoid taxes on that capital gain?
I wish, unfortunately not. There are some other planning opportunities that can be done there, but you would be subject to the income restrictions for the Roth. So if your income is above a certain threshold, you may not be eligible for Roth IRA contributions. If your employer offers a Roth contribution through the 401k or your employer-sponsored plan, you'd be subject to the age restriction limits there. But that would be the max that you would be able to do. There may be some other interesting planning strategies, though, for a large sale of a home that we could talk about offline.
And the next piece is, I think, related to that question. Somebody saying that they've received income from a part-time job where they are not paying any Social Security taxes because it's not required. Any considerations?
I'll let Yolanda take that one.
Oh my gosh, you're going to have to repeat that question. I was drinking water and I didn't listen. I'm sorry.
So it says, kind of related to the capital gain question above, saying if we've received income from a part-time job where we are not paying any Social Security taxes because it's not required, is there any considerations to think about?
No, you cannot use that money unless you're reporting it on a Schedule SE for Social Security credits. And the only consideration you're going to have is when you become Medicare eligible. Capital gains will definitely affect your premium. And this is a great conversation we're going to have next Wednesday about, capital gains and Medicare and how it affects your benefits.
And so next question, regarding previous spouses' benefits. Both previous marriages were greater than 10 years. One has since passed away and the other is living. If currently retired, am I eligible for any of their benefits?
Absolutely. If you are not a government pension recipient, you would definitely want to consider which of the 2 marriages would pay you the highest. So what you'll need is a marriage certificate, a divorce decree to prove your 10 years of marriage, and then Social Security will give you a monthly amount.
So the next question, is there a table or form that shows how much you are required to pay into Social Security if you are a public worker and your spouse is the only one who pays into the system?
So to get a credit, to earn a credit, you have to earn, let me look at this. I'm so glad I'm getting a break here. So I think it's, I can't find my head is not working super fast, but it's almost like $5,000 to earn 4 credits in 1 year. Do you have that, Paul, by any chance in your notes?
I don't. If we can get the person's contact information, we certainly can follow up with them in answering that question.
Okay, well, the bottom line is you need to make about $5,200 a year to earn 4 credits. And so at the end of 10 years, you would have your 40 credits, but that's the minimum. But remember, the minimum of earning Social Security, when people say, well, why is my Social Security so small? I'm only getting $200. Well, one, they were self-employed. They didn't report their wages accurately. And now they're getting a $200. And I've seen Social Security monthly benefits as low as $79. So the more you pay, the more your Social Security benefit will be. Hope that helps.
Yep, and so the next one goes just to that. I think it relates to the 2020 max of 3,011. Someone's current Social Security estimator lists 3,044 per month, so they're retired age 70. I'm assuming that max may increase over time with inflation.
Yeah, there's a cost of living adjustment each year to Social Security, so that would increase the benefits potentially.
Yeah, this year was 1.6, last year was 2.8. So yeah, cost of living. And you know what, actually, I'm so glad whoever asked this question is great because, when you apply for Social Security, let's say at 66, and you had some low years in your earnings in that chart that we look at, all your high 30 years. So if you're now working, if you're back on the workforce and you have higher earnings to replace one of the low years that Social Security used, it will recomputate your benefits and your monthly benefit will increase. So that's important to remember. Thanks for showing this, Paul. Yeah, the best 35 years. So if you see a low year there, and of course, remember they're indexed, but it could definitely be in your best interest to keep working if you enjoy it, to recomputate your Social Security. And the recomputations that I used to do also went between $5 more per month to $48 more per month. And that was the highest I've ever seen a recomputation going up to $48 more per month based on income, wages. Thank you.
Okay, guys, next question. And I say, be careful with this one, you two. Is there a suggestion that politics is the only answer to reducing the 85% tax on pensions? Or is there anything else that might impact that as well?
No. So any comments that are made about politics were tongue-in-cheek today. In terms of the 85% tax on pensions, that's a little bit separate answer. The discussion there at the very last slide that we had about potential changes, and my comment here was just more tongue-in-cheek than anything else. These are just different changes in terms of covering the solvency for Social Security. In terms of the 85%, I'm not sure any political thing with that. That's just the way that it's currently set up. So if you make above a certain amount, 85% of your benefits will be subject to income taxes.
Perfect. And so, oh, go ahead. Sorry, Yolanda.
Well, I guess I kind of read that question or understood that question wrong. When she was, it was that they were talking about 85% of the pension. When you talk about a pension, we're not talking about Social Security benefits because Social Security are not benefits. I mean, they're not pension. So if you're talking about your pension, I don't know the answer to that. If you're talking about Social Security, then that's a whole different question. So pardon me. Okay.
And so the next question, which again, I think it might, Paul, it'd be good to go back to a slide that shows different ages and the percentage of Social Security you would get.
Yep.
Does the percentage increase if you retire between 62 and 66? And it is correct, it increased about 8% per year.
Correct.
And so the next question is, waiting for a bigger benefit could be offset by any remedy that might come about to keep Social Security solvent. Is that correct?
I wouldn't say that, because I have confidence that Social Security is going to give you 100% even in the year 2035. And I know 2035 is just around the corner, but Social Security is too valuable not to make it solvent. So I wouldn't, you know, it's really hard for me to say here what we need to know, but you know, reading. Oh, and here's something that may help you. If you sign up for Social Security news updates, it'll tell you what's happening with the solvency of Social Security in the future. So that may help you. But for now, you should just be aware of that. A possible reduction to 79% of the benefit.
So our next question is, when I retire at 66 and my spouse is a homemaker at age 41, can they still get my benefit? And also, can my children under the age 18 also receive Social Security benefit?
So if you have children under the age of 18, yes, your children would be entitled to benefits. If you have a spouse and you have children under age 16, then your spouse would also be entitled to that maximum benefit that Social Security pays.
So our next question is, are death benefits retroactive if the spouse passes away before retirement age?
Death benefits can be 6 months retroactive. So if you didn't know that you were supposed to be collecting benefits as a spouse, they could be 12 months retroactive, yes.
And so next question is, if I'm a widow that's going to collect benefits from my spouse, does the windfall affect me if I receive a pension?
Yes, it does affect you. That's called the government pension offset. You would have a 2/3 offset.
And that is assuming it's a government pension, to clarify, is that correct?
If it's a government pension, yeah. So if you are collecting a pension that was not covered under Social Security, yes, you would have a reduction. Again, if you are collecting that pension, but if you're not collecting, then it's a different answer. You would be entitled to survivor's benefit until you collect that pension. But if you're paying into Social Security now, then obviously no offset occurs.
And so next question, if my ex-husband is still alive, but I'm 68 years old, can I collect now on his Social Security?
Well, of course you can. And let me show you how. So if you're not collecting any benefits, or let's say your ex-spouse's, remember, you can only be entitled to 50% of what your ex-spouse is receiving. And to do that, you'll have to set up an appointment, bring in your marriage certificate, divorce decree, and then show or document with his birth certificate that he is at least age 62 in order for you to get 50%. But if your benefit is higher than the 50%, you will not be entitled to additional benefits. On the other hand, if he passes away and his benefit is higher, then you get to inherit a higher rate. Good question.
So next question is, if I defer my Social Security benefits at the time my spouse files for Social Security, are they still affected by the windfall provision?
So I'm trying to understand this. If your spouse is collecting, your spouse is going to be entitled to a government pension offset. And if you worked and paid into Social Security, you could be entitled to your Social Security benefit without any offset. But if your spouse is working into and paying into a system not covered by Social Security, then you would not be entitled Well, you would, pardon me, you still would be entitled to part of his benefit, but it would be reduced. And I apologize if I'm not getting your question correctly. Actually, I would need to ask you a little bit more questions to give you a better answer to this.
Our next question is, how can a widow apply for the spouse's benefit if the widow's in a nursing home? Are they required to go to the Social Security office in person? Or would they make,
Okay, this is very easy. All you have to do is call Social Security 800-772-1213, book an appointment. Their offices are open from 8 a.m. to 5:30. Pardon me, and when I say the office line, not the office, they're closed for temporarily, but they could be a telephone appointment. The person would not need to come into an office. It could all be done by phone. You'll just need to document and provide information.
And so our last question for today, before we end the webinar, is can you briefly explain what is the government pension offset?
So it's a law that affects spousals and widows or widowers. So if you receive a retirement or disability pension from a federal, state, or local government based on your own work, which you didn't pay into Social Security taxes, Social Security may reduce your spousal benefits or widow's benefits. There is a fact sheet that Social Security provides. It's called Government Pension Offset, and it talks about what the reduction will be. So if you get a monthly civil service pension, for example, of $600, 2/3 of that, or $400, must be deducted from your Social Security benefit. So for example, if you're eligible for $500 of spousal benefits, and you'll now get $100 from Social Security. That's what it amounts to. So it's a offset specifically for spousal, widows, widowers benefits.
Perfect. And so that is our last question for today. Again, Paul and Yolanda, thank you so much for your time, especially staying on for an extra 30 minutes to continue answering questions for the group today. We want to thank all of you for attending our presentation today. We definitely encourage you, Social Security and Medicare are tied really closely together. So Paul and Yolanda will both be on with us again next week, same time at 10 o'clock. To do again, about a 30-minute presentation with a live Q&A afterwards on Medicare as well. We definitely encourage all of you to register and tune in next week as well. With that in mind, thank you all for your time and have a great day.
Thank you, Chad.
Thank you,
Paul.
everyone.
Enjoyed talking to you.